Welcome to Demystifying Tech, a business cloud podcast which examines the impact of technology on industry and wider society. In each episode, a technologist from one of the UK's most innovative companies will break down a key area of tech and offer practical takeaways for your business. In this episode, we are joined by Ali Hamriti, CEO and co-founder of FinTech Rollee, which aims to improve financial inclusion for self-employed workers. Today, Ali will discuss the problems faced by those operating in the gig economy, explain how Rollee is helping them to access products such as credit and mortgages, reveal how it is growing at an equal pace in the UK and France, and advise startups on how to improve financial inclusivity. Good morning. You're not very well today, are you? You've a bit of a sore throat.
Good morning, John, and thanks for having me. I'm a bit suffering, but it will be okay. We're gonna make it. I'm super happy to attend your podcast.
Do you have lemsips in France? You know, like hot lemon?
Look, I mean, I'm still in Paris. I mean, like the weather in Paris is pretty good. I try to understand how I got this cold, but look, we are by the end of October, so I think it's pretty normal. I'm not going to complain.
Amazing. Yeah, let's start off. Let's get straight into it. So, what do we mean by the gig economy, first of all? Because, you think about kind of, I don't know, Uber drivers and delivery workers in the UK, but actually there are other types of workers that fall into this category, right?
Sure. That's the most well-known type of gig economy today, because we are used to have those applications that you mentioned, like Uber, Deliveroo, all of those applications. But the gig economy covers all type of short-term jobs or specific projects that are run by independent contractors. This is what we call like the gig economy, and it impacts all the industries, not the industries that we know, like the food industry, the delivery, but all industries have their own gig worker, independent contractor that decided to freelance their skills. So it's a trend that has always existed. It's not new, but this trend has been accelerated over the past decade with the internet, with the number of new applications that help people to develop new sources of revenues. So that's like what we call today the gig economy.
So, for example, it could be a solopreneur, someone who's got a side hustle that sort of turns into their main source of income. It could be a journalist who's working freelance. And actually, when these people come into this world, they maybe don't understand some of the problems they're going to face. We're going to explain that in a moment. 66% of gig workers of across all these sort of areas have been denied a loan, haven't they, despite having good credit scores, while a third have missed out on opportunities such as buying a new home. Mortgages, for example, have been declined by building societies and banks, but they can often, or for a large part, actually afford these things, but actually the system lets them down, doesn't it?
Yes, totally. We have different type of gig workers, and in general, people who decided to start being independent contractors or freelancers. One of example that I like to share, that I like to mention, is the example of immigrants that are like high skilled. They used to be doctors, they used to be lawyers, and they have like to go to another country. And because it's quite complicated for them to find a similar job, they start with the gig economy. So they start their like low income job, the time to get the right diplomas and the right certifications to redo their job. And we have like other people that just decided to start being a freelancer because they want to increase their revenues, and more than that, to diversify their sources of revenues. So just those two different categories of workers give us the fact that the gig economy is not something that is unique, centered around one type of worker, but we can find a lot of different type of gig workers. The problem that you mentioned, like the fact that a lot of gig workers are still denied financial services, is because the financial system has still some standards around worker solvability that are more beneficial to full-time employees. We still consider that full-time employees that have a single employer are less risky than freelancers, which today is not really true. When we know that a lot of industries had to lay off, especially this podcast is Demystifying Tech. We know like the number of layoffs in the tech ecosystem. So it's not because you are like full-time employee in a startup or a scale-up that you're guaranteed that you're gonna get like your job during a long time. Of course, your employability is good because you can join another startup, but by definition, you can lose your job after 1, 2, or 3 years because the business you're working for is risky. And financial institutions consider freelancers as more risky than full-time employees because they don't have the right tools to consider them as less risky. They don't understand the nature of their revenues. They don't understand the nature of their activity. They are not today they are not today empowered to project the income of a freelancer in the future. And this is exactly what we try to solve at Rollee. We try by building our infrastructure to help them to put more context about freelancing, about like different type of jobs, to help them to be more confident on providing them with financial services that they need.
Before we go into your background and the origins of the company and what Rollee does in more detail, just give me an indication of how that employment landscape is changing, because once upon a time, perhaps the vast majority of people were just in employment with a company. But like I said, COVID has also had that impact where people are working from home. Maybe they have more confidence to strike out on their own as well. Like I said, maybe they were laid off from the tech sector or many other sectors, in sort of an economic downturn, and out of necessity had to strike out. So actually, how did you see this kind of employment landscape sort of changing, let's say, over the next 5 to 10 years?
We tend to forget that COVID was 2-3 years ago, so it's still super recent, and we are still witnessing the effects of the COVID on the employment landscape. Just Rollee is a small company, but we're a good example of the type of companies that have been built during COVID. I founded Rollee with my co-founder. We had to work remotely at the beginning. We didn't have time to see each other, and we decided to build not a full remote company, but a remote first company by hiring people in different countries. And just like this idea wasn't like a popular idea or something that we thought could be possible in big cities like Paris or London, where the local workforce is highly skilled. And usually we just think about building local teams. So the first big effect that we're still witnessing is companies that want since day one to build international team and to hire in different countries, different geographies, which has some positive effects because you think about building a business that is scalable. You're not afraid about engaging with partners or customers in other markets that are not your local market. But at the same time, what we observed is the willingness of a lot of, especially like the youths, to work with teams with like more social interactions because they struggled during the pandemic more than anyone else, especially people who were doing their master's degree or bachelor. And we have like to provide as a company to all of those workers an environment that match with their expectations. So this is like the first effect that we've observed as the willingness of workers to choose their job. Now, regarding like the employment, there are like other things that are currently impacting the employment landscape. We can talk about AI because it's the buzzword of the moment, even if AI hasn't been built in 6 months. But right now, we've seen a lot of companies that had to lay off because they consider that some jobs could be replaced by an AI. Or we've seen a lot of studies saying that some industries are at a high risk to be replaced by AI. I think in general that the employment landscape will evolve based on the global market trends. So there is like no new trends regarding this. It's more how can we match with what companies want to do in terms of automation, in terms of not losing this momentum of being more performant thanks to the AI, and at the same time, the willingness of people to join some companies.
So you saw this problem firsthand while you were working for a previous company. Can you just describe what happened and how you identified this opportunity, if you like?
So I'm a data scientist. I still consider that as my job. I think that founding a company is more vocation, like more willingness to do something, but I still identify myself as a data scientist. And I was working for a FinTech that provided loans to freelancers, to small businesses. The first observation was that we wanted to build some analysis. We wanted to see who's a good profile or who's not a good profile with just a single source of data, which was like banking data. in general. We thought that with banking data, we can do everything. That's wrong. You can't do everything with banking data. You can do a lot of things. You can do amazing things to make the financial system more inclusive. But it doesn't match with all of the financial products in the market. And you are trying like to define some rules on some things that are not really suited to what you want to predict. Simple example, with open banking, for buy now, pay later, of course, you can do like a quick credit check about like the last months of transactions to help someone to buy an iPhone. But what about the mortgage? What about car financing? What about financial products with like a high risk? You need to assess the professional situation. You need to project the income of people. So open banking was not enough. It can like provide a small picture of the current financial situation, especially the expenses, how people are spending their money. But to be sure about the financial the professional situation of someone, we needed other types of data that we call alternative data, and basically payroll data is part of that. So the first observation was, could we add new sources of data to be more inclusive in the way that we are underwriting people? Starting with that, we identified, especially for freelancers, new type of data sources, like gig platforms. We're talking about that, freelancers platforms, try to understand what is the activity of freelancer. And just with that type of data, we were more confident to provide a loan to someone. So the company I used to work for, I was talking about layoffs recently. The company I used to work for had to shut down because of the pandemic, the first day of the lockdown. So it's the reality of a lot of tech companies that suffered during like the pandemic. And it was clear that what we observed with my team at the moment has to be solved at scale, not only for lending, but in general to make all data that people owns, their data, their activity, their income, all of the data that can help them to improve their credit score or to improve their probability to have a loan has to be leveraged. And to leverage that, we need to build an infrastructure that can connect all of those data sources.
I suppose you're kind of living the experience, founding the company. Just tell me a little bit about how that happened, how you did that. You say your co-founder's based in the UK, is that right? And how is the UK an important market for you?
So my co-founder is based on south of France. He loves the UK, and I love the UK too, but he's super happy in south of France. So we met through a common connection, and so like the fun fact, when I met him the first time, I was looking for a co-founder that has like some skills that I didn't consider having and completely complementary to what I wanted to do. We met so the day before the second lockdown. It's a question of lockdown still. So we just had like a quick meeting before his train back to south of France, and we decided just after that to work remotely, so not working together in Paris, during 4 months without any counterparty, to be sure that we definitely match in terms. First of all, super important, if there is like a fit, a human fit, and second one, if we are aligned about the type of company that we wanted to build. And it was natural. I mean, at some point when it's working, you don't think about, you don't ask yourself some questions. I mean, when you have like a professional fit with someone, you just continue, and it's been like 3 years. So yeah.
So if you've got a data science background, but you're the CEO, is he also sort of a technical guy, or?
No, he's so he was sales director in a FinTech firm in Paris. And the way that we fragmented the organization at Rollee, we consider that CEO is everything related to external things. So basically, doing this podcast, trying to share with people what we are doing and to share our mission, doing the fundraising with investors, for example, that's another example. And internally, so this is like the role of Pierrick as a COO, he's like more involved than me of the internal things, which is people engagement, running the administration, running like the financial spending. So we just splitted the responsibility between external and internal. And that's honestly a good organization that I can share with early stage founders that want to build a company. If you're like two co-founders, that's super important to fragment really well what you're doing and not having a lot of overlap. And that has been recommended by our early investors, Alexis from Kima Ventures, a French fund, that say that this is what he observed before that was working well. Yeah.
You said that the UK was kind of an important market from the outset, and you've been growing equal in the UK and France. How did you approach growing in the UK if you didn't have a co-founder base there, for example? How did you approach that?
That's a great question. Since day one, we were convinced that addressing the UK really fast is critical for us, because financial services, the financial landscape in the UK, and especially the startup financial landscape, is more developed in the UK than any other countries in Europe. We decided, I mean, we started with the choice of our first lead investors, which is Seedcamp, UK-based. And also our first business angels are British people used to invest in startups in Europe in general. And they helped us to develop our first leads, to sign our first customers. During the first year of the development of Rollee, I was like, I came a lot of time in London. So basically sometimes I was spending like 1 week per month, meeting customers, prospects, doing some presentations. So for us, it was pretty clear that we wanted to prove two things: that our product is scalable in the UK or France, but we can address both of markets. That Rollee had to be a good brand in the UK, because we believe the UK in the future will be our main market. And we know that we are selling to banks, to insurance, and it takes time to create a relationship and a trust regarding a solution. So we wanted to start as early as possible to be sure that we are in a good position in the future to engage the best customers in the UK.
You say you're working with banks and insurers. Are you working with like early stage startups too to help them build a kind of more inclusive financial product from the outset?
Sure. So as all startups, we all start by selling to startup and scale up. So if you look at our portfolio of customers, there are mainly startups and scale up. Some of them are no longer considered as startup and scale up because they have a strong business model. They are doing like dozens of millions of ARR per year, and basically they are like more a future competitor of incumbents right now. And regarding banks and insurance, we started to talk to them like recently, 6 months ago, to discuss how we can like work together. For us, it was important to go super fast, to iterate on our product, and it's much more easier with flexible startup and scale up than doing that with banks and insurance. As you know, selling to banks and insurance takes time, and also it's a common process to start with the proof of concept, to do some consulting before scaling. So for us, it was clear. And for early stage startups, we just observed that there is a new ecosystem of FinTech that wants to build inclusive financial products thanks to payroll API. So we just understood that our infrastructure can help all of those startups to build innovative financial products. And we have to partner with them. We have to help them to build their product at the beginning. So we did a lot of workshops with some of our companies to accelerate their product launch. And as part of them, some of them will be the future leaders, and we want to be the infrastructure that we have them.
So payroll data is where you start. And I know you've touched upon a couple of other areas, but what are the kind of plans for bringing other data in from other sources over the next year, 2 years, 3 years, however long you want to put on it?
Good question. I mean, of course, payroll data is fragmented across hundreds of different platforms. That's a fact, and it's growing because we are talking about gig platforms and freelancers platforms, but we talk about also HRIS for full-time employees or HRIS for platform workers. We see industries like construction being digitalized thanks to new solutions in the market, and we aim at being integrated into those solutions to help people share their income data thanks to those new softwares. So just with payroll data, there are tons of things to do to have the highest coverage in this landscape. The vision of Rollee is to, first of all, provide job to be done to our customer. We want to remove frictions for them to access the data that they need. But more than that, we want to help them to run their use cases, to reduce their default rate, to reduce their churn rate. And with that, we always have to consider new data sources to put the best context around a company or around a worker. So I can talk about all of the open databases in France or in the UK that we can connect to, and we can leverage all of those data. I can talk about also the new AI-powered tool that can help to identify some data sources or to collect information regarding the market. We are building a data science team that has mainly two objectives: being sure that our customers make always the best decision, and being sure that our infrastructure is growing with the best coverage in the market. So payroll data to start, and of course, completing payroll data with other type of data sources.
And I suppose once that kind of the result of using your product shines through in terms of the number of bringing those customers on board, increasing that holistic view of it, I guess it sells itself, right? And it's quite a sticky product, I imagine.
Yes, it's so. This is where you see the difference between fintech infrastructure that we are at Rollee and software as a service platforms. So when customers decide to integrate Rollee, it's a specific project. It can take time for some of them, but when it's a success, the probability of churn is super low because they have built some products on top of us. They can like measure they can measure like how they reduce, for example, their losses, how they reduce their churn, their fraud rate. So there is a strong stickiness in general with fintech infrastructure, especially open finance platforms like us. It's great to start. I mean, we don't need thousands of customers to scale. Having a few customers, but with like a high potential for us is better than multiplying the number of customers. But we are focused on how we can always bring them like more value. We think that it's sticky for the next 10 years, but if you think about the next 20 or 30 years, we have to provide like more and more value. And we want to, by the end, help them to always like see how to use the data and not just collecting the data.
So this is the part of the pod where we ask you for your tech takeaways. So a few quick fire tips for startups looking to improve the financial inclusivity of their products. What can you tell them?
The first advice, something that we've been working with our customers, and we figure out that it's not like the priority for a lot of companies, is to have a clear view of their users, who the users are, what are their backgrounds, are they freelancers or full-time employees, are they coming from this geography? So doing a customer segmentation first is super important. Why? Because based on this customer segmentation, they can figure out that using Rollee for 20% of the users, for example, could be much more affordable, could be like much more rewarding for their metrics than using another platform that doesn't match this type of customers. So we are in a world where we can use a lot of APIs to run several use cases. And we always have to figure out what is the best solution that is suited to this category of customers, of users, and how can I improve my solutions thanks to that. And starting with this work, we'll help them to identify Rollee, for example, as the platform that can help them to build a specific car finance products or lending products for Uber drivers, or to build like a mortgage offer for developers that are freelancers, or to build, for example, a specific leasing offer for companies that are using Rollee's HRIS employees integration. So just with that, they can have a lot of new information, and they can have a lot of new ideas on how to improve their product.
But I guess it's kind of building it into every aspect of the business, right? Whether it's the business plan, your customer acquisition strategy, you just need that lens of actually, how do we offer more value? How do we sort of onboard people who maybe could fall through the cracks? But actually just having that there in the background, looking through it and saying, be aware of that. Is that kind of message getting across to the market? Are people, when you go into a meeting, for example, let's say in London, do the people get what you're trying to do, or is it kind of a bit of a light bulb moment where they say, "Oh, do you know what? I've never really thought about that."
I would say it depends. Sometimes I'm meeting some product managers who are aware of our solutions, who looked at other markets like the US and how solutions like Rollee helped big neobanks to be better in their financial innovation. But usually, I have to admit that solutions like Rollee are new solutions. It's normal. It's a new category. Before us in Europe, you didn't have any similar solutions. So that's like just a fact. And we have to continue to educate people who have to make some decisions, so risk managers, product managers, data scientists, that it's possible to look at other alternative data sources that are much more adapted to their use cases instead of trying to do everything with one single source. This is the first, for me, shortage of the way that some people in the industries are running the use cases, is that they say, I took, for example, 2 years to integrate open banking. I'm going to do everything with open banking. It's not at some point the right way to do. It's easy to integrate other data sources or other platforms like Rollee. And the question is more, is this open finance platforms, is open banking platform match with what I want to achieve regarding this category of users, yes or no? Regarding this financial product, yes or no? Based on that, we can have like some deep discussions on how we can go and help them in their use cases. And I prefer that way because it's a lot of learnings also for us on what type of data sources we have to add to Rollee to be complete solutions for them.
Okay, Rollee coming to a fintech platform in the UK near you soon. Let's step away from that for a moment and let's meet Ali Hamriti himself. Tell me something about yourself that would surprise me to finish off.
So something surprising.
Something personal. It could be something to do with business as well, but yeah, something.
Yeah, I mean, something that is not common. I'm not sure that you're going to find this for all companies, especially early stage in the UK or France. So anywhere, we wanted to build an international team with Pierrick, my co-founder. That was super important for us. So at the beginning, we said, if one day we are 100 people at the company, we'd love to have 20 nationalities, 20 different nationalities. Actually, we're 23 and we have 20 nationalities different. So just, it wasn't something that we wanted to reach. It wasn't like an objective. It was completely natural that our first employees.
23 staff, 20 nationalities.
Yeah, 20 nationalities. So basically some people, for example, I'm Moroccan and French. Pauline is French and German, or head of marketing. Thibaut, our head of product, is French and American. But if you add like all of the different nationalities, we're going to find like 20 at Rollee. It wasn't, as I said, something that we wanted to do. I mean, we had like other objectives, but naturally we ended with just as still a small team, I would consider having more than 20 nationalities. So that was surprising, and we're super happy with that because it's one of our main strengths. Is that with that we understand better different markets, we understand better different ways to address our solution, and we think that if we continue to do well our work, that would be exponentially rewarding in the future.
Wow, so that's really good advice. And actually, by creating it as a remote first company, as you said earlier on, it takes away that barrier, doesn't it? I know, for example, London and Paris are very diverse. People from all different countries live there, and nationalities. But actually, by saying we're remote first, you don't have to live within a certain geographical boundary. You actually you open the door to employing someone on a different continent, for example.
Yes, exactly. I mean, you summarize like how we ended with that. One of the main learnings regarding being remote first is that sometimes you don't need to hire in dozens of different geographies. We just figure out that there are like some different regions of the world where we can find that, especially one country, one city, with some regions of the world where the workforce regarding the one specific skill is great. And that's also like good learning if we enter a phase of scaling to consider that as well.
Fabulous. Listen, it's been an absolute pleasure today learning about Rollee, learning about how you're trying to improve financial inclusivity, through working with your partners. Gig economy workers are facing these problems. They come in many shapes and sizes. Different industries, for example. It's something that we all need to be aware of. So thank you for that.
Thanks a lot, John. A pleasure to speak with you.
Yeah. If you've got any feedback on today's episode, scribble it down on LinkedIn, X, or YouTube, or drop us an email at podcasts@businesscloud.co.uk. If you enjoyed the episode and found it useful, please like and subscribe on your preferred podcast platform to be among the first to hear insights from technologists at renowned companies of all sizes. Thanks for listening and see you soon. Demystifying Tech is a Business Cloud podcast produced in partnership with pan-European B2B tech PR and communications agency Taito. New episodes are streamed on Business Cloud's YouTube, LinkedIn and Twitter pages from 12 p.m. on the second Friday of every month, while you can find all episodes on YouTube and all major audio podcast platforms. Subscribe now so you never miss an episode.